So my point of view is, and the point of view that we've been explaining to people in DC, and the point of view that we explain more and more successfully to people in the capital markets, like large institutions, the largest institutions in the world, is that the digital asset trend, the real world asset tokenization trend, is the conversion of the financial system into our industry. So from my point of view, cryptocurrencies are kind of like email in the internet in the early days of that technology's adoption. And so at a certain point, if you were to ask someone about the internet, it would be synonymous with email because that was the main use case of the internet, right? And then you had other use cases for the internet that massively outstrip email as a use case, right? Like we don't use the majority of our time on the internet doing email. We do a lot of other stuff on the internet, e-commerce, consuming video, in this case, making video, so on, so on, and so on. What I mean about the market aspect of this is that the whole global financial system, the US financial system, will be tokenized and then it'll be managed through a collection of smart contracts. And that new version of the financial system is very important for our industry because it represents what mainstream adoption looks like. I don't think that mainstream adoption looks like everybody sells all their real estate and all their gold and all their stocks, and then they all buy Bitcoin, and 100% of everyone's portfolio is Bitcoin. That's not realistic. I think what's realistic is that the percent of everyone's portfolio that's Bitcoin or cryptocurrency goes from sub 1% to 5%, which would get you to that $1 million per Bitcoin number. But then everything else in their portfolio, as an asset manager, a sovereign wealth fund, whoever you are, all the other stuff in your portfolio is tokenized. And that's really the next stage of our industry and its growth. And that's actually what we're driving a lot of.